Welcome everyone. In today's video, we will discuss and test a profitable investment strategy aimed at helping you in the markets. Today, we will focus on an approach that, in my opinion, is exceptionally underrated. This strategy can be used by investors at any level of expertise. It is based on 3 free indicators available on TradingView.com and can be applied to any instrument with a large number of market participants, such as stocks, Forex, commodities, cryptocurrencies, and indices. Now let's go over the setup. First, go to the Indicators tab on TradingView and search for Smoothed Heiken Ashi candles developed by Jack VMK. This indicator does not require changes to the input parameters, but you can adjust them depending on your time frame. Personally, I modify the style of the candles of this indicator. To do this, click the Style tab, then the Wick option, and reduce the transparency to 0. I'll explain more about this at the end of the video. Next, add an indicator called Cumulative Delta Volume, developed by Lonesome the Blue. We also want to change a few elements in this indicator. Go to the Settings, and then click the Inputs tab. Uncheck the Heiken Ashi option and add SMA 50 to our indicator by checking the appropriate box. You can also change the colors of the SMA and candles, but I personally leave them as default. We already have 2 indicators, now it's time for the last one, which will help us confirm the entry. Go to the Indicators tab again and add STC Indicator, a better MACD developed by Heiken. This indicator is similar to the standard MACD, but it has built-in moving average data, which increases precision. The settings do not need to be modified. The last thing we need to change on our chart is the original candles. To do this, go to the top left corner of the page and find the small I symbol. Press it once to remove the original candles. Now, only the smooth Heiken Ashi candles remain on the chart, which makes it easier to identify the main trend, allowing you to avoid negative emotions associated with trading, leading to poor decision making. We do this to reduce noise on the chart, which can mislead the trader. For long positions, we need 3 unique features on our chart. First, the smooth Heiken Ashi candles must be green. Second, the cumulative delta candles must break the 50 SMA line. Third, the STC indicator line must be green and above the value of 75. If all these conditions are met, we add the original candles back to the TradingView chart. We open a position at the close of the appropriate candle. The smooth Heiken Ashi candles give us an edge in this situation. These candles can also be used as a moving average, but they also closely correspond with the ATR, making them an effective stop loss. We set the stop loss just below our smooth Heiken Ashi candles. We always aim for a risk-to-reward ratio of 1 to 1.5 in this strategy, but you can adjust it to your preferences. Now let's go over a few short examples. For short positions, our strategy must meet 3 conditions. First, the smooth Heiken Ashi candles should be red. Second, the cumulative delta candles must break the 50 SMA line downwards. Finally, the STC indicator must be red and below the value of 25. If all these criteria are met, we can open a short position. We add our original candles back to the chart, and we use the smooth Heiken Ashi candles as our stop loss. We set the stop loss just above the candles, and our risk-to-reward ratio is 1 to 1.5. Time for another short position example to better understand this strategy. As you can see, the smooth Heiken Ashi candles are red. The cumulative delta candles have broken through the 50 SMA line downwards. Lastly, the STC indicator is red and is below the value of 25. We can now open a short position. We add the original candles back to the chart. Just like before, we set the stop loss just above the smooth Heiken Ashi candles and aim for a risk-to-reward ratio of 1 to 1.5. If you plan to try out this strategy, we recommend testing all time frames, such as the 1 minute, 5 minute, 15 minute, 1 hour, and 4 hour. Leave a comment about which time frame you'd like to trade, and we'll provide the best settings for the indicators. In conclusion, the presented investment strategy is based on three indicators: smooth Heiken Ashi candles, cumulative delta volume, and STC, a better MACD. This approach can be applied to various markets and time frames. Proper entry points are confirmed by meeting the three conditions described earlier for long and short positions. Always test strategies on a demo account before applying them to a live account. Thank you for watching this video. If you enjoyed it, please give it a thumbs up, which greatly helps promote our channel. If you haven't subscribed yet, we invite you to do so to stay up to date with our latest videos and content. Also, don't forget to hit the bell to receive notifications about new content. If you have any questions, suggestions, or would like to share your experiences, feel free to write in the comments below. We'd love to hear your thoughts and we'll try to answer all questions. Good luck applying this strategy. Remember to always trade responsibly and in accordance with your risk level.